Hello and welcome to my channel. My name is Jake Kuzno and this is HTA Personal Finance. So before we get to the video, I want to plug and advertise my new book, How to Adult Personal Finance. So if you've been watching any of these videos and you find them helpful and you want to learn more, I strongly suggest using this as a resource. You could purchase it on Amazon. It covers these topics and many more. Again, that is How to Adult Personal Finance for the Real World. Thank you and enjoy the video. All right, let's begin this week with our key terms. So key terms for basic banking, we've got checking, savings, certificate of deposit, direct deposit, debit versus credit, online versus traditional versus credit union. Those are types of banks that you can bank with. And last one is overdraft protection. I don't want you to be too caught up or too intimidated by choosing a bank, because really the bank you choose is probably not going to make you a millionaire. It's not going to cost you millions of dollars. So really the most important thing is having a bank account. Now, when this whole channel is dedicated to helping you build your wealth and avoid debt and understand all of these concepts so you're prepared and you can make informed decisions. But one of the most important things in this process is being organized and really keeping track of your money. And if you don't have a bank account, that is very hard to do. So you need a bank account to make sure that you know exactly how much money is being spent, where it is, and you can actually organize savings and checking so you can use your money most effectively. Now, the basics of banking, you really need to have two accounts to get started. You need to have a checking account and you need to have a savings account. Now, these things are very similar. They're just going to be accounts where you can keep your money, but with a checking account, that is where you are going to withdraw and deposit money that you're going to be using frequently. So if you're going to be buying stuff at the store or buying gas for your car, you're going to use your checking account to do that. And even if you're going to be using a credit card, which I'll talk about later, you're going to be paying your credit card off with your checking account. So this account is going to be used very often. You're going to have a lot of transactions going in, going out, and then you're going to have a savings account, and really this is more of a one-way street. You want to have money going into your savings account so you can just sort of build that account for, it might be for an emergency fund. It might be because you're saving up for a down payment for a house, or maybe you want to buy a car one day. So this is the money that you are trying to grow, and you're going to use that money later. So the savings account, you're going to put money in. You don't want to be taking money out very often. Another primary difference between checking account and savings account is your savings account is generally going to offer you an interest rate. So if you haven't watched the video yet, watch my previous video on interest. So they're going to actually pay you money to keep money in their account. Currently, as of October 2020, interest rates are like historically low, so it's going to be a very low rate. You're not going to make a ton of money off this, but it'll probably be higher than your checking account. Your checking account might not offer you any interest rate at all. But if you're going to have a savings account, again, so you will be paid interest on keeping your money in a savings account, and if that's important to you, you're going to want to find a bank that offers the highest interest rate possible. Now, if you're interested in a higher interest rate and you know you're going to be keeping your money saved for a while, you're not going to need it for, let's say, I don't know, 2 or 3 years, you might want to use a certificate of deposit. Now, a certificate of deposit is called a CD. And how these work is, it's very similar to a savings account, but they're going to offer you a higher rate than most savings accounts, but on the one caveat that you need to keep your money in there for an extended period of time. Maybe it's 2 years, 3 years, 5 years. And so the longer that you keep your money in the account, the higher the interest rate they're going to give you. Again, currently, October 2020, interest rates are really low. So these are not the best option, but if the interest rate is high enough, it could actually be a very good deal. Again, but if you take your money out before that term, whatever you agree to, if it's 5 years, then you're not going to get that guaranteed interest rate. So if you know that you're going to need money in the next couple of years for a big purchase like a car, or maybe you don't have an emergency fund yet, certificate of deposit is not the right choice for you. So let's talk about some services of basic banking. Something you're going to want to enroll in, if you have a steady paycheck and you're getting the same employer who's paying you like every week or every other week, you should enroll in direct deposit. So direct deposit, it takes your paycheck and just puts it into your checking account automatically. And one of the benefits of this, a lot of times at banks, they will eliminate any fees, any monthly fees that you have, or they'll offer you other incentives if you do enroll in direct deposit. Because basically it tells the bank, hey, this person's going to be putting money in steadily, and that's going to actually help the bank if they have more money. So direct deposit, again, is just going to be a direct deposit from whoever's paying you, and it goes directly into your account. And again, this is just sort of streamlining your organization. If you sort of eliminate the chance that you're going to lose the check or you have to physically go into the bank, it's just going to keep you more organized, and it's going to simplify your expenses, simplify your finances. Another benefit of having a checking account is you get a debit card. And a debit card, you may already have one. You probably already do have one. But a debit card is actually it's a card that is linked to your checking account. And it's usually MasterCard, Visa, whatever. You can use them anywhere. But how they work is you're going to go to the store, and if you use your debit card, it takes money directly out of your checking account. So again, you don't have to carry around cash. It's just way more convenient. One question I get from my students all the time is they're going to have their debit card, and let's say they go to Starbucks or they go to 7-Eleven, and then they use their card, and before they actually finish the transaction, the person working in the store says debit or credit, and my students always freeze and panic, like, I don't know what the difference is. And to be honest, there is not a huge difference for you. When they ask that question, it really determines how, if it's 7-Eleven, how they're going to process the transaction. If you say credit, it doesn't automatically turn your debit card into a credit card. It has nothing to do with your line of credit or your credit card, which I'll talk about later. But it still takes it out of your checking account or whatever it's linked to. It just might take it out a little bit later. It might take it out at the end of the day. So again, if you have a debit card and somebody asks you debit or credit, for you it doesn't really matter. It's still coming out of your checking account. All right, now let's talk about the different types of banks. We've got traditional banks. These are your Wells Fargo's, US Bank, Bank of America, Chase. We've got online banks. So online banks could be like Capital One or Allied. And then we've got credit unions. Now a credit union is a bank that is specifically tailored to different groups of people within society. It could be like a teacher's credit union. So either a teacher or family members of teachers will bank there. Firefighters credit union, so stuff like that. So before you choose which type of bank you're going to use, let's take a look at the differences between them first. So each of them have their pros and cons. So first, traditional banks, they're everywhere. You could probably see one in 5 minutes. If you get in your car, you're going to be able to see them all over the place. They also have more services because they have a lot more money, so they can basically offer everything out there. On the downside, they have higher fees. Their interest rates are very low generally, and some people will say that they are less personal. So you don't get the same sort of customer service that you would with an online bank or with a credit union. Now with an online bank, they have better interest rates, they have convenient online experiences, and they have lower fees. Downsides, there's not a lot of branches, hard to deposit cash, and they may not have all the services you need. So again, an online bank they don't have physical locations that you can walk into. But basically today, I do almost all my banking online, so I love online banks because they're more convenient, they have great apps, services. If I do have a problem, I can call them, and customer service I usually get through quickly. But again, let's say if you work in an industry, let's say if you are a server and you get a lot of money in tips, so you have a lot of cash, you don't really have a place to deposit it, or it's a lot more difficult to deposit it. So if you are one of these people, an online bank might not be the best option for you. Additionally, if you need to withdraw a lot of money from an online bank, that's also difficult because they don't have branches that you can walk into. They only have the ATM, and ATM have pretty low limits on how much money you can withdraw in a day. Lastly, we have credit unions. So credit unions, they have lower fees, they have higher interest rates, and more personal. So these are great if you happen to be a member of whichever community they're trying to serve. So if you are a firefighter and there's a firefighter credit union near you, it's probably going to give you the best rates, it's probably going to give you the best customer service. They're fantastic. The downside is they don't have locations everywhere. So if you're somebody who, let's say, travels a lot, or if you need to do banking in different places, it may not be ideal. And again, you have to qualify for the credit union. You can't be just, like, I'm a teacher, I can't just go join a firefighter's credit union just because they have the best services or the best fees or the best offerings. All right, last thing I want to talk about today is called Overdraft Protection. Now, this is a horribly named service because it has the word protection in it. And very often it is not meant to protect you. Very often it is meant to make you pay crazy fees and really just sort of keep you in a hole. So here's how overdraft protection is supposed to work. Overdraft protection, let's say if you have $5 in your checking account, the bank is going to tell you, hey, we'll give you overdraft protection, and if you only have $5 in your account, but you need to make a $20 purchase for gas, we will help you out. We will basically support you. We will let the transfer go through, or we will let the transaction go through. And basically when that happens, they're either going to pull money out of your savings account, which could be okay, but if you don't have money in your savings account, what they're going to do is they're going to charge you a fee. Now that fee is usually $30 or $35. So basically they're saying, yeah, I'll help you out. I'll get you out of this bind. I'll get you out of this situation, but you are going to need to pay us. And the other problem with overdraft protection is, let's take a look at this example. So if we see here, this is just a list of transactions. This is basically a person's checking account, let's say. So all of these transactions are on the same day. And let's say the person starts with, they buy gas for $30, and the remaining balance, they only have $20 left. And then they go and buy coffee. Now they only have $15 left. And, for whatever reason, this person doesn't recognize that they are almost out of money and they're almost about to go negative. Then they go and get groceries for $40. So now their account is officially negative. Now it is negative $25. So if you don't have overdraft protection, the grocery store is just going to deny you. They're going to say, sorry, your card got declined. Go put the groceries back. And it's embarrassing, but it's a lot better than the alternative, because here is the alternative. They make another purchase, so a cell phone bill, $100, and now the account balance is negative $125. So what's going to happen to this person is they're going to be charged $30 for the groceries, and they're going to be charged $30 for the cell phone bill. So not only do they need to bring their account back to zero, but they also need to pay the bank $60 in fees just because the bank protected them by allowing them to make the purchase. Additionally, this is the real kicker. Banks are not the nicest people sometimes. A lot of times what banks will do is they will not put the transactions in the order in which they took place. Like, for example, they won't do gas, coffee, groceries, cell phone bill. A lot of the times what they do is they wait until the end of the day and they order your transactions by highest amount to lowest amount. So in this case, with this scenario, they're going to put the cell phone bill in first. So that cell phone bill goes in first, $100, and you are automatically negative. That first transaction is going to put you negative, and every transaction after that is also going to be negative. So not only will you just have the 2 overdraft protection fees, in that situation, you're going to have overdraft protection fees for all of those. In that case, if it's $30, it's 30, 30, 30, 30. That's $120 just because you made a small mistake of forgetting how much money was in your account. So again, overdraft protection is not really meant to protect you. It is meant to help you, or meant to make the banks a lot of money by making you pay more fees. So now you have to actively enroll in overdraft protection. My advice to you is don't enroll in it. They're going to try and sell you on it. They're going to try and get you to do it. I would not do it. I would just take the walk of shame where you take the groceries and have to go put them back on the shelf, because that's better than paying $120 in fees. All right, that is basic banking. So the next thing that you need to do, if you don't already have one, is go open a bank account. So don't be intimidated by this decision, and really just choose the bank based on the things that are important to you. So do you want an easy to use app, or do you want great customer service? Do you want the highest interest rates? Whatever. Don't overthink the situation. Again, having a bank account at any branch or any type of bank is way better than not having a bank account. So for me, the things I care about are low fees or zero fees. So basically, if a bank tells me they're going to charge me $10 per month to have an account there, and I see that there are plenty of other banks who aren't going to charge me anything, I'm going to take my money somewhere else. Because even if that fee is, let's say, $10 per month, that adds up. In 1 year, that's $120. So for me, I really care about low fees, and I want good customer service. I want an easy-to-use app. So that is how I choose my bank. Whatever it is, whatever decisions or whatever parameters you use, just make sure that you have a bank, because that is the best way to keep your money organized and keep your finances moving forward and get them to the place that they need to be. All right, now, like every other shameless YouTube video out there, please, if you enjoyed this video, please hit like, please subscribe, and most importantly, if you have any additional questions, please leave them in the comment section here or on my website at htapersonalfinance.com. Thanks for watching.